Yeah, so hi everyone. My name is Nicole. I'm part of the Student Investment Fund with Aliana. So I'll give everyone just a quick moment to kind of just introduce themselves as I put up the PowerPoint.
Hi, everyone. My name is Aliana. I'm also part of the Student Investment Fund.
Hi everyone, my name is Julia. I'm part of the Student Venture Fund.
Sorry, is Victor on mute or?
Keaton, were you able to change Victor as a panelist?
Yeah, I just did, and he decided to not be a panelist anymore. So I'll make him a panelist real quick again.
I think we'll just get started and then for
Yeah,
his
just
part.
get started.
Yep.
Okay. So just a quick introduction. We'll be going over the Student Investment Fund, and then Julia and Victor will be going over the Student Venture Fund. The Student Investment Fund will also do a sample case, and we'll also give a background and a little bit of our career paths, as well as the internships we've had, the extracurricular activities we've done, and what's led us here today. So for the Student Investment Fund, as mentioned, I'm Aliana. I'm currently the CEO and Senior Portfolio Manager, and I'm joined with Nicole, who's the Director of Outreach and Senior Portfolio Manager as well. So the Student Investment Fund, the long answer in what the Student Investment Fund is that we provide an investment management experience to students, which involves providing hands-on training in terms of equity valuation and portfolio management. But that's a really fancy way of saying that we have a portfolio of almost $400,000, and we essentially invest in different stocks within the Canadian space and the US space as well. So in terms of investing, it's not like we just put money anywhere. We have a strict philosophy that we kind of follow, and that is one of a thematic investing approach. That's also another really fancy way of saying that we look for really good companies that are priced really well, that align with current trends, and we essentially invest in it to generate long-term growth. So when it comes to wonderful companies, what do I mean? Well, I mean companies that align with trends that are going on. So post-COVID, there's been a lot of demand for athleisure. So think Lululemon, think Nike, that would be considered a trend. We would look for strong management. So who's the CEO? Who's the CFO? Is it a strong management team? We look for a strong economic moat. So in terms of an economic moat, think of Disney. They're a huge company, so many different business lines, and you know Disney when you know Disney. We look for strong balance sheets. So how much debt do they have? Does it look like they're going down the drain? As well as we look at their business model too. Is it a good business? Is it something that's sustainable? Is it something that can go, well, going forward, can they still make money? Of course, there are a lot of good companies, but a lot of them are really expensive. So we look for companies that are valued really well. And what this means is that we compare it to its competitors. This is where a lot of the technical analysis that comes in with Excel. We essentially try and see how much money can this company make going forward. And as mentioned with the themes, we look for a long-term focus. We're not trying to make a trade and sort of invest and then make a profit within the next week or so. We're really looking for good companies that we can hold in our portfolio that will make us money in the long run.
So going through some of our investment process is, as you can see, our titles is how on the fund we work as junior analysts, and then we're promoted to senior analysts, and then finally portfolio managers. So as junior analysts, you're usually doing your sector updates. So maybe this is looking into holdings that we already have in our portfolio. So for example, we have Canadian Tire and Disney. So maybe you'll just give us an update on any company progresses. And then once you're a senior analyst, the role that you're kind of doing is stock pitches. So maybe this is looking into the space, looking into trends, figuring out what's a good company, and then presenting it to the other fund members or the portfolio managers to really gauge into everyone's thoughts and seeing if this is a really great idea. So we do this into a two-step process. So the first step is just a pitch one, we like to call it, which is really looking at 4 companies that we think are really great, and then just to learn more about them. And the top 2, stock pitch 2, as you can see, That's kind of where we do our actual analysis, and we do a financial valuations, which I won't get too much into, but essentially it's just more Excel work. As for when you're promoted into a portfolio manager, you're really looking at all of our holdings as a whole. So this means, you know, our stocks in the Canadian industry or the US industry. Is there risk? Should we exit one of the industries? Should we put more money into the other industry? So then it just becomes more of an overview look. So essentially these routine portfolio monitoring for material changes to prices and of these thesis is what we have on the bottom. And that's kind of the entirety of the goal of the student investment fund. So here I'm just showing you some of the past theses or past themes that we had. So we did consumer technology, where we pitched common brands that you all might know, such as Lululemon or Nike. We also looked at intelligent manufacturing, which is, you know, an age or a space that we think is really important in today's time. Aging population, supply chain disruption. So these are just a list of companies that we thought were really interesting, and we wanted to focus more, not only to see if it's worthy of an investment, but also as a learning purpose for everyone else on the fund.
So a lot of sort of the misconception with the fund is that we just focus on equity valuation and looking at these companies and trying to pitch a buy, sell, or hold. But we do have a lot of learning opportunities for our students as well. A recent one that we had was an MBA panel in conjunction with Women in Finance. And this is where we got to see past alumni that are pursuing graduate degrees at some of the best schools in the world. Think Harvard, the University of Pennsylvania, Stanford, and London Business School. And our students were able to understand what does a career look like outside of undergrad. And I know a lot of you are in high school, so it's probably premature, but these are really good opportunities that help you understand where you want to go going forward. Of course, we have fireside chats as well. These are a lot more intimate settings. So one of the more recent ones that we've had was with the head of global fixed income at Scotiabank. And this really offers an opportunity for students to learn a bit more about what a career trajectory might look like in that kind of position, sort of the steps to take to make sure you have a strong and fulfilling career in the long run. And of course, I would be remiss if I didn't mention our external finance competitions. Because this is DECA, I'm sure you're all aware of how important case competitions are and how beneficial they are. And it's no different in university. A lot of our students have done really well when it comes to external finance competitions. As you can see, we've placed really well, and that's something we're really proud of.
Yeah, and just to add on, these are a lot of our alumni that were previously on the student investment fund. So a lot of what we learn on the fund, they're able to use that to win competitions, which is really great to see.
And I'd argue one of the most valuable aspects of the student investment fund is the opportunities it gives you in terms of summer and co-op placements. So this includes some of the most high finance kind of positions. So think investment banking at some of the big US and Canadian banks, private equity, so looking at different companies, sales and trading, consulting, venture capital. We really have alumni all across the board, and a lot of our students are further pursuing careers right now even too.
So now we're just going to walk you guys through some of our holdings and seeing what we actually do on the fund. So here I have an example of the Walt Disney Company, which is actually a company I believe we bought last year. So I thought that would be interesting to share what kind of our PowerPoints or our presentations look like. So essentially, if this was a holdings update, I'd probably just give a general overview of the company. So here we've broken it down into, nice graphs and a good looking text, which basically means it's easy on the eyes to see. So we might say that Disney is a company that's located, across the world, and predominantly you can see that 73% is in Canada or the US. We might also point out that they have several different operating segments, such as network media, the parks segment, the studio entertainment, and their direct to consumer, or commonly known as their Disney Plus. And kind of the reason why we want to point that out is you might think, oh, well, parks aren't really doing well in these times, especially if no one's going to them because they're afraid, or they're closing down, or there's just a lack of people in these areas. And then we might actually leverage by saying, well, look, even though they have these parks that aren't doing really well, their network media is doing really well. And pointing out these segments is a really great bonus for anyone to see. For example, Disney Plus has done extremely well. ESPN, ABC, all these networks is something to leverage, especially in a time where everyone's staying at home. So just pointing these factors out has been extremely beneficial. And with these presentations, they also give you an advantage of practicing your public speaking or knowing how to answer questions that other people are going to ask you. So I might also look into why I think Disney is a great company. For example, I have down here, it's an interconnected business with a very large media assets. So these are generally points that we want to drive or kind of communicate to others when we want to say that this is a great company to buy into. Maybe we also want to say that the risks are such as streaming wars between Netflix, Hulu, that might pose some of the risks to Disney, post-COVID recovery or changes in executives, right? So this kind of information isn't something that you're going to find on the internet. It really requires time to reflect, think about, and what you want to present. And that's kind of the fun of the student investment fund, right? If you're really enjoying investing, you're going to put the effort of researching these companies and learning all about them and how to showcase that in a presentation. So here we kind of break it down more of a statistically presentation. So we might say here the numbers that we're seeing, right? So for example, we purchased Disney back in, it says August of 11th of 2020. Our purchase price was $130. The current price is going for $168, right? These are our profits so far. So if you look at the chart, performance since purchase, right? That says a lot to how our fund's doing or how this stock holding is doing specifically. And then on the side of the key statistic, these are just some more percentages or rates that you guys will probably be more commonly see once you're in university. But these are pretty important things that we want to point out during our presentation. So, you know, numbers are very important. And that's kind of what we would present in a setting. This would definitely be the first kind of presentation before we're actually showing any analysis. So this is more so kind of understanding the business. And now we're just going to hand it off to the Student Venture Fund.
Awesome. Thanks, Nicole. Thanks, Aliana. So if we could go to the next slide, please. So good evening, everybody. My name is Victor, and I'd like to tell you a little bit about SVF for the next few minutes. So what I want to start off by doing is giving you guys a sense of what the Student Venture Fund is about, similar to what SIF did earlier. So similar to what SIF does, we are a venture fund in the sense that we're looking to make returns. What's different about how we operate versus how they operate is that rather than investing in publicly traded companies, we invest in earlier stage companies, startups, venture companies. So we're dealing with very different problems in the sense that our financials don't go back so far. There's a lot more qualitative estimates and guesswork and modeling that we have to do as opposed to the very rigid and rigorous financial modeling that you might see. So the other difference that you might see perhaps compared to SIF or some other universities funds is that we care a lot about learning. So we place significant emphasis on learning first and then getting returns second. And part of this is as a consequence of our investment being focused on very early stage companies. So the companies that we tend to look at, most of them will not be as profitable or as stable or as reliable as you could see on the public markets. So we often say that, out of 10 companies that we might look at, 2 of them are going to be rock stars, 6 of them are going to be pretty meh, and then the remaining 2 are just going to drop dead. So having said that, the benchmark and sort of the way we try to operate and what we're trying to look for in these companies is we're looking for over a 7-year investment horizon to get about a 20% IRR. And what that kind of works out to is we're looking for individual deals to target a 60% IRR because of that 262 that I mentioned. So that would be a 10x cash with the final balancing working out to a return of ideally 38% IRR or 5x cash. Although it should be noted that this is a very ambitious and lofty goal, and many venture funds are quite happy if they get over a 20% IRR reliably. And then the last thing that is interesting and might be worth mentioning is that we operate with $1 million in committed capital. So there is quite a bit of money that is being managed here. If we could go to the next slide, please. Thanks. So a little bit more about myself and Julia. So like I mentioned, my name is Victor. The last co-op that I worked at was doing AI portfolio construction. And for my full time, I'm going to be working in New York at a high frequency trading company. And I'm going to pass it off to Julia for a little bit about herself and some more about the fund.
Yes, thank you. So yes, my name is Julia. You'll notice that I only have RBC up. That's because most of my co-ops have been with them in different divisions and different cities. So my last summer co-op, I did quantitative research and trading, specifically for their equities algorithmic trading team. And that was in New York. For full-time, I'll be moving to Toronto, where I'm going to still be doing quantitative technology, but this time for their AI trading platform. We could go to the next slide. Yeah, so I just want to go over kind of a day in the life of the Student Venture Fund, or more like an entire term for the Student Venture Fund. So the first thing we do is introductory company research and decision on entering due diligence at angel investor meetings. Now, to break that down, due diligence simply means fact checking, making sure that the claims the company put forward to us, such as this improves the quality of life for 1 million people, are correct. And angel investor meetings are where these companies pitch to us, these entrepreneurs pitch to us. Think of that scenario as if you've seen Dragon's Den or Shark Tank. Someone comes in and pitches to these angels an idea that they have, but they need startup capital. So after we see them pitch, we then do due diligence with angel partners and independent due diligence on our side. So there's usually one major due diligence meeting with all of the angels again coming together to focus on the one specific company. After that, we'll come back to the class, we'll pitch our findings, we'll pitch our new opinion on the company, and do further research after we have discussed as a team whether to move forward or not. So at the end of all this research, there has to be a decision on the company. Is it attractive? And then we create an investment proposal summary outlining the due diligence criteria check marks, which we'll go over shortly. So, and the very last step is we have to present to the investment committee, and only if they approve it will we follow up to deal close. This investment committee is made up of pretty high power people, including Tim Jackson, which is the head of SHAD. Sorry, I believe he's also on our advisory board. He might have switched. And so with that, we'll go on to our investment criteria. Oh, sorry. So this is sample deal funnel where it gives you an idea of how many companies we actually do this process with. So 16 companies we saw pitch. Only 10 of those we decided were worth looking into. 5 of them we intended with other angel investors their due diligence meeting. And only 2 of those made it to our IC committee where we were recommending to invest in them. And I'll pass it to Victor to go over these criteria.
Thanks. So as we go over some of the criteria that we look at, there are a few things that I wanted to emphasize from what Julia said that are, I think, really important points. So the first thing is that as we go through this process, it's important to realize that because we're dealing with real companies and real money, we're also working with other real angels. So that means that the person sitting to the left and to the right of you at the negotiation table or at the investment meetings, angel meetings, are actual high net worth individuals who are investing their own money. And similarly to that, our investment committee, as Julia mentioned, is made of very high profile people who have experience and have had personal exits in the space. So there's a lot of really awesome knowledge and really awesome exposure to these people and their unique experiences that is a really unique opportunity that you won't see in other programs. And now to kind of build up on what Julia was saying with regards to how we evaluate these companies, there are a lot of different factors for these companies that we try to examine. And what we've kind of found is that the few really important ones that we look for are what management is like, what the company's market traction and validation looks like, and sort of, what does our potential exit look like? Now, naturally, there are more than these that we consider, and I'm going to walk through in short for all of the items on the slide. Just keep in mind that, because we don't have as much concrete quantitative numbers, we have to find metrics, find value, predictive value in other aspects. So first of all, with regards to management is really important because at the stage of companies that we're dealing with, there's not really much else there. in the sense that the ideas can change, the people are what's going to actually end up executing on the idea, and what could turn a poorly thought out product into a very successful product, or an excellent solution for a definite problem in the market into something that doesn't sell well because they can't pivot or they can't interact with customers or whatever you may have. Next, we talk about the product and intellectual property, which, as you might imagine, is very important. And intellectual property is very, very important for early stage companies because they don't have the resources of the larger companies. And so they need something to sort of build a moat around themselves so that they don't just get their lunch eaten from in front of them. So it's really important when you look at these companies that there's something that stops other companies from sort of doing the same thing. And naturally, that ties into their strategy and their business model as well, where depending on the model that they approach, they might be more or less susceptible to, we'll say, not great competitive practices in the market. However, what we tend to find is that most companies these days are aiming for a SaaS model, which is really great for us because it means very predictable, very reliable revenues. And it's also great for them for very similar reasons. In addition to the fact that one of the great things about SaaS for early stage companies is that the clients will often pay early at the start of the period. And so the companies get to front load all of their revenue and then use that to grow and fulfill the requirements that they have. Next, we talk about market validation and traction. And this is probably the most important externally validatable aspect of a company, because if a company doesn't have traction, it means that it's not selling. It means that whatever their product might be, they haven't yet been able to explain to the market why the market needs it. And conversely, if they have great traction, then that could be a sign that, we as students, we don't have all of the intricacies and deep background into all of the various fields that our companies might be working in. And so that's a good proxy for us to judge whether or not a company is going in a good direction or not. We also look at competitor analysis, and this ties into what I said earlier. Not only what are the big players doing, but what are the other small players doing? Is what they're building now a unique innovation, or is it something that can be easily copied? With regards to financial analysis, here we look for things like what's their runway, what's their burn, are they going to make it to their next funding round? Are they going to be dead in the water in the next few months? So this is much more, I'd say, shorter term than what you might see at SIF, for example, because we really just want to make sure that the companies are in a stable enough position. With regards to investment risks, there's tons to talk about. And what's really interesting about the companies that we deal with is that because they're so early stage, there are so many investment risks and no two deals are the same. So there's a lot of learning opportunities to be had there in terms of how you go about evaluating and approaching these deals and kind of, making sense of whether or not it's worth investing this money or not. And lastly, we also take a look at the deal structure and our return scenarios. Now, the way that the fund operates is we're never going to be a lead investor simply because we're too small in the scheme of all of the angel investors. So we tend to be more revisionist on the terms and tend to be more deal takers rather than deal makers. But so that means that it's much more important for us to plan out our return scenarios more carefully, because if we're off on our numbers, then that could make a very big difference between whether a deal makes sense or it does not. Next slide, please. And so just briefly to talk a little bit about some of the portfolio companies, and then I'm going to hand it over to Julia to touch up on anything I might have missed. So these are our current portfolio holdings, and you could see them on our website as well. I'm just going to touch briefly on what each of these companies do. We can't really get into much more detail than that, simply because we are under NDA with all of these companies, because again, real companies, real products, real money, etc. So Nicoya is our golden standard. We met them during one of the very early semesters that the fund was operating. And what they do is they have a tabletop device you can think of as like a small printer, and it's able to run some really cool molecular scientific experiments in a way that before in Nicoya, you were talking about very expensive machinery that took up, more space than an oven. So they had quite a few drastic improvements there. With regards to Darwin AI, what they do is they do some really awesome AI modeling. They do model optimization. They do model compression, and they're another really interesting company because one of the lead technical people on the team is actually another University of Waterloo professor. And so we really like building up the Waterloo community entrepreneurship space. BrainFX is a medical diagnostics company for diagnosing brain concussions and mild brain trauma, at the edge. Vena Medical, they do medical catheters. So these are intravenous devices that can provide doctors with like a glimpse of what's happening inside of your arteries. Eureka is another AI play where they're doing sort of like homework help solutions. So, you could message the Eureka bot and say, I'm having trouble with my calculus homework. Could you help walk me through this? And it'll, ask you for what you've done. It'll highlight any mistakes you've made, give you advice or problems and sort of how to move forward. Chalk is an educational company, so they're trying to bridge silos between the various educational platforms. And lastly, LabsCube is a materials diagnostics company. So they report on, they do physical testing of materials that companies might want to be trying out, like polymers or new rubbers, new materials basically, and seeing how they wear and tear. And now I'm going to pass it on to Julia, sorry, before we go into concept.
Yeah, absolutely.
Anything I may have missed.
Yeah, if you could just go back one slide. Yeah, so just going back to how I went over the whole due diligence process, the repetitive process of that, I wanted to emphasize how long or short these deals can be, because these are live deals made with entrepreneurs who have different timelines. And so, for example, I was on 2 teams on this slide. I was on the team that covered brain effects and Vena Medical. So brain effects, we saw for about a week and a half before we had to present to the IC. So during this time, we had to decide why we wanted to invest, if we wanted to invest, and how to convince an entire panel of people whose net worth is more than all of our life savings to invest in this company. And then second, Vena Medical, we took an entire semester. So even longer, actually. We took an entire 3 months to work on this deal, present to the IC, they approved the deal. But the actual closing didn't happen. And so when I returned again in spring 2019 to the team, I still had to kind of help out the Vena Medical team and say to the IC, we know you approved this before, but it didn't close yet, so we need your approval again. So that can kind of give you an idea of how different each company can be seen. Yeah, let's go on to, so the extracurriculars. I know Sif talks about all the competitions they're a part of, and we do have competitions. The main one we have is the Concept 5K involvement, where we're actually on the other side. We're not competing, we're judging. So SPF members lead a coaching session, which Victor did earlier this week, on how to write your application. Then we help them screen applications and we choose the semifinalists. At that point, there's around 74 applications. And then at the semifinals, Concept, Imagined by Velocity, has about 34 companies pitch. And we have 1 SVF team member there. I did it last term, and I was the one giving feedback, telling them what they could improve on, and as well being a part of the final decision on who should move on to the finals. And as well, we have competitions like the venture capital investment competition. I'll be on the graduate team this year, and we placed first place last year, beating, I believe, Ivy and Queens. So to show a little bit more of the SVF team, David, who was one of my senior associates when I was on the team, won the 5K pitch competition. So he actually went in as a competitor with his own idea, his own team, and he won the 5K. So this goes to show that the SVF, we're not just financial nerds crunching down numbers, judging other people. We're also invested in becoming entrepreneurs ourselves. So going on to the next slide. A little bit about where we end up or where we have been. So again, those connections at Darwin AI, we have that. Uber Eats, Omer's a couple of times. As well, I do want to mention that our network also leaves a reputation behind. So I've gotten interviews because of David, who we just saw. He recommended me for an interview saying that I was on the venture fund, and they offered me the interview. And this was at Kazana in San Francisco. And then moving on, we'll go to full-time placements. So we'll get into where I'll be going soon, but we have people at Ripple Ventures, which is a VC fund itself. We have a lot of graduates at Deloitte, as well as some as investment banking analysts, and then, yeah, at Goldman Sachs and all that. All right, so moving on, we're going to talk about our careers and internships and extracurriculars. So I'll start off. So this is my career pathway. So on the fund, I started obviously as an applicant, and we progress pretty linearly if you're seen as fit and ready for the role. You go from junior analyst, senior analyst, associate, and senior associate. When you reach the senior associate level, you're actually running the entire fund. The profs take a major step back, and you're planning classes, you're managing deal deadlines, you're still presenting to the IC, you're contacting the IC to make sure they show up, and everything to do with the entire fund. And so extracurriculars, I was a part of the UWaterloo Athletics and Recreation as a dance instructor. I was part of Fashion for Change on campus, which is also a dance showcase, and as well as worked with Waterloo residences. Academics, so both Victor and I are in computing and financial management. So the highest I've gotten is advanced corporate finance. And the highest in computer science, or the most interesting that I found, was my machine learning course last term, as well as doing a statistics minor. As for internships, which might be more interesting to you folks to see what kind of experiences that these funds can offer you or get you ready for. So I was first a general accounting and a finance intern at Logic 3. I then decided to try out a little bit of the tech role, and I went to RBC for that. So I was in their automated QA team for equities. There, they actually put me on a side project. I developed a dashboard that I'm 99% sure is being used by the futures or the FX team as their main dashboard. And then after that, I wanted to return. I went back as their front end for one of their equities trading boxes for their traders. So I was working on the technology that the traders were using. After that, I decided to try something else, decided to try a very general business role at Actualize. I was a senior consultant there and did a lot more project management. Then I decided that wasn't for me. I really wanted to be a quant. So I landed an internship with RBC again in New York, doing quantitative research and trading, again on their equities team. I mentioned that. And then finally, I really like the RBC environment in the tech space. So I'll be going to Toronto and working on Aiden, which is their artificial intelligence trading platform, which is fairly new. So you can check out the news articles. And I'll hand it off to Victor to talk about his pathway.
Thanks. And as I do that, I'm also going to try to touch on Ishi's question. So this is my 5th semester on the Student Venture Fund, and I've actually been on the fund longer than I believe anybody else at this point, because we don't take students until they're in their 2nd year. So no first years, unfortunately. With regards to what you can kind of do in high school to prepare yourself, I think the best thing is to sort of look at the pathways that Julia, myself, Nicole, and Aliana have taken and sort of draw inspiration from that. There's no single path that works for everybody. In my case, extracurricular wise, I've been very involved on the computer science side of things. I was the vice president for the computer science club twice. I volunteered with Hack the North. As you can see, just even from my co-op placements, I've been much more on the technical side of things than on the finance side of things. Morgan Stanley, GTS is a high frequency trading company. Academics wise, likewise, I've gone through the CFM program, so I have lots of exposure to the finance side of things, but also a fair bit on the technical and math side of things. So, there's no real one size fits all. And with regards to Akash's question of extracurriculars in university, I'd say similar things, and I would also pass it off to Aliana and Nicole for further questions or for further comments and their pathways as well. But in general, do the things that interest you in university, and ideally those should align with the kind of jobs that you're looking for as well. I don't think it makes sense to do one without the other. So having said that, moving on to the team.
Yeah, so I had a bit of a different pathway from Julia and Victor in the sense that I went pretty traditional finance. One of the first courses I took was Introduction to Finance, and I realized at that point that finance was something that I wanted to do. But the thing you quickly realize is that there's so much to do within finance, and that led me to apply for the Student Investment Fund. And I really wanted to explore something within the fund, just a career within finance. So I did my first internship at CIBC Capital Markets. This was actually more of a tech role. I was offering support to the trading floor. And you know, when I was in high school, that was sort of the only idea I had about finance was the trading floor, and that's where I want to work. So that kind of gave me the exposure there. But after that, I started my first term on the Student Investment Fund. I was covering TD Bank, and that was really pivotal in the sense because I was able to realize, yes, finance was something I wanted to do, but there was really so much I could do within finance. As I mentioned before, I could work on the trading floor, I could be in private equity. For those of you that aren't familiar with private equity, if you think of a house flipper on HGTV, all those shows, private equity is the same idea of flipping houses, but it's with companies instead. And that was something I found really cool. Investment banking was another one that I found really cool. But the first thing that I really wanted to try was trading. So I headed to Scotia. I was a sales and trading analyst working on their trading floor, which was so cool. I loved it. But at that point, I still knew that I wasn't ready to give up trying everything else. So I went back to school. I took a quantitative finance course, which I loved, and I went back as a senior analyst on the fund. This time I got to do my own stock pitch. I covered PayPal, which I was really proud of, and that really helped me land my next job because it kind of gave me an idea of what kind of companies to look for. And I took a course on private equity, and I ended up landing at a private equity firm called NovaCap. They're based out of Montreal, and I was part of the first financial services fund in Canada, which was a really cool opportunity. Loved private equity, still wasn't ready to give up on trying everything else. So went back to school. I joined Women in Finance, which as a woman in finance, I think is really valuable. So if you're a female student interested, I would really encourage you to consider a career in finance. There's a lot of us and it's getting really exciting. I headed back for my final term on the Student Investment Fund. This time I was the CEO and senior portfolio manager. And that's been really cool. And it's been really given me a lot of opportunities to see different careers. And finally, I'll head off next summer or this summer to Barclays to work in their investment banking division. So more of a traditional finance background compared to Julia and Victor, but it's all really good opportunities that I would highly recommend anyone to try out. Nicole, you can go next.
Yes, thank you. I just want to add that I actually met Aliana from the Student Investment Fund, so we're really close friends now. But you know, if I didn't join the Student Investment Fund, I probably would have never met her. So I think in terms of my career pathway, it was a little bit different from everyone, just because I took the accounting approach. So of course, you take your Introduction to Finance, which is one of your first courses as a first year. I'm in the program of accounting and financial management. So you take finance as a prerequisite almost to your future courses. So in your second year, you would then apply for the Student Investment Fund. So I applied, I got on. At the same time, I was also doing an internship at KPMG. It just seemed that the people that in this program or at Waterloo at that time was very focused on accounting. And I would say there's a good part that's focused on accounting and there's another good part that's focused on finance. So I started out doing accounting. I was doing audit. You know, my dream was Big Four. And then after I did the work, you know, I wanted to try something else. And I think it's really important to discover that through your co-op opportunities at Waterloo. So that was really great. So then I went on to being a junior analyst on the Student Investment Fund, and that's when I covered Canadian Tire, which is, you know, a Canadian company, which is great. So I covered Canadian Tire on the fund. This is just, you know, doing a holdings update because we've held this stock since, I believe, since the fund even started 10 years ago or something like that. So it's been a while. And then I did my other internship as a risk management consultant at Ernst & Young. So that was a little bit different because it involved more of math and more of computer science almost. So I wanted to try something different. I was still kind of in the accounting stream in that environment, but I knew I wanted to do finance just because of what I was exposed to on the student investment fund. So again, I was able to take introduction to computer science. So this was actually taken as an elective. So unlike Julia and Victor, I was not in the part of the computing and financial management, but that doesn't mean you're not allowed to take the courses that still interest you, which is really great. So then after, when I was a senior analyst, I covered this company called Inovalon. And you guys are probably wondering, what is Inovalon? I've never heard of it before. Well, don't worry. When I covered this, I didn't know what this was either, because I didn't really have a choice on what stock I was pitching. But I think that's the beauty of being part of a learning process such as the fund itself, because this is actually a healthcare technology company. And I was like, I've never done healthcare before. I don't know anything about it. And you know what? Surprisingly, that actually led to me getting my third internship, which is at Bloomberg, which is actually a boutique investment firm. So I was there as an investment banking analyst. And how I actually ended up getting this job was because I did a stock pitch on a healthcare company that I didn't even want to in the first place. It's funny how things turn out, because I had a lot of things to talk about this company. I had really great discussions during my interview, and they decided that they really liked me, and that's kind of how I got the internship. So definitely learning opportunities are surprising. You might discover that you like something without ever trying it or ever thinking about it. So that's really great as well. So now I'm part of our student investment fund as a director of outreach, and also as a senior portfolio manager. So I spend a lot of my time working with Aliana as well as we're planning the investment fund and our classes, and etc. In terms of other curriculars, I'm also on the Women in Finance, so I'm one of the co-heads on that. So this is actually a club that we do accept first year, second years, or any year. So if you guys are interested in the future, definitely please check out our Women in Finance club. And then finally, for my next internship, which is the summer, I'll be going to BMO Capital Markets as an investment banking analyst. So that's kind of my career pathway of how I shifted from accounting into finance. And I think that's it for our presentation. So on behalf of both the Student Investment Fund and the Student Venture Fund, we'd like to thank you guys for listening. And now we're opening to any questions you may have.
Yeah, just before we get to the Q&A, I just want to mention we see your guys' Instagram story challenge DMs, and we appreciate it. We've seen them all, and we will make sure that you get the credit for doing that. The Q&A portion, we will make you guys all panelists, so you can all turn on your cameras and turn on your mics. If you still don't feel comfortable, you can just throw your questions in the chat. You're probably going to want to ask some questions. These presenters are very smart, so they're very open to your questions, and they want you to ask questions. So please feel free. Don't be afraid. We're not scary.
Yeah.
So oh.
Yeah, I'm a first year mentor, so I'm very used to also rambling about myself. So I can run a short panel if there's no questions.
Okay.
I did answer a question on behalf of the investment fund. So someone was asking what a coverage group is. Do you guys, Nicole and Liana, want to explain it further?
Yeah, sure, I can take that. So for us, a coverage group is kind of like a different industry that you're working with. So let's say, you're interested in technology, which I'm sure the venture fund is very well versed in. We have a coverage group called Technology, Media, and Telecom, or if you're looking at the banks, we have financials. So our coverage groups are basically segregated based on industry. Nicole, I don't know if you have anything else you want to add to that.
Yeah, I think you covered it all. We just call it different industries. So if you guys look up the S&P 500, you'll find that it's made up of retail companies, mining companies, oil companies, and that's kind of what we would categorize as coverage.
So there's another question here for you guys. So what are the requirements to be in the Student Venture Fund?
For the venture fund, you need to be a part of the School of Accounting and Finance. So that's many programs, including accounting, computer science and finance, biotech CPA, which is biology, technology, and going towards your CPA. You can be in the MBET program. That's a master's program, but it can be part of the MBET program. And anything that falls under the School of Accounting and Finance. And then apart from that, you need to take your finance courses up to, I believe, corporate finance. So that happens for CFM in second year, and you're able to apply for your first term in 2A. So you have to go through your first year, and then only in second year you can be part of it. That's partly due to the course requirement.
Yep, Julia touched on everything. I just wanted to highlight that it is an application process. So there is an interview period. It's not like regular courses. I believe SIF is the same. You can't just sign up for the course and everybody's accepted. There is a vetting process as well. So just keep that in mind.
Yeah, but don't be too scared of that, because they're pretty nice people.
So there's another question that came in here from Layla. What is one piece of advice you would give to someone who is looking into finance and would like to apply to the Student Venture Fund?
I see, Julia, you're still thinking, so I'm going to hop in real quick. I'm going to say that you don't need to care so much about the financials as you might need for something like SIF. Naturally, of course, you will still be exposed to that, and there's lots of learning that's there. But just by the nature of the companies that we're dealing with, there's not that much financial information to base your decisions off of. So I won't say that the rigor of what we're working through is lower, but you have to consider that, for SIF, they're working off of audited statements because these are public companies. We're working off of an Excel sheet that we got from somebody that was last updated 2 months ago, and we're really hoping that it's up to date. So the amount of finance that the level of the finance that's there is slightly different. I think that if you just do a good job going through your studies and your academics, that's really going to prepare you as much as you need. Julia, if you want to add to that.
Yeah, be yourself. Be genuine is the advice that I always give, whether that's networking advice, career advice. Be yourself. When they ask you why you want to join, have an answer, and want to join. And be able to talk to people, because part of the venture fund is being not an advocate, but being a part of the University of Waterloo, and you're talking to real people who are trying to start their own Uber, their own $1 million idea, as well as other angel investors who are putting in 100 times more money than we are. And you have to be able to work on a team. Every single decision we do is in a team.
So there is another question for you guys. Was it your co-op placements that landed you your internships?
Sorry, can you just double check that? Co-op placements landing our internships?
How did you land your internships? Was it from your co-op placements?
Oh, okay, so I think there's just confusion. We talk about summer internships because that's when our co-op term was. All of our internships are co-ops, all of our co-ops are internships. For me, yes, they very much did lead to the next one because RBC knew me and I could reach out to MDs who I met. Literally, we went out for lunch, and that's how I got my full-time job. The team in New York was like, we need a master's or PhD student. I said, I don't have that. I emailed the MD that I really liked. I never even worked with her before, but I emailed her and said, can I please come onto your team as a new graduate now? But she finally said yes. So for me, yes, my internships did come from past internships, but Victor had a very different experience.
I think just for the sake of brevity and giving SIF a chance to answer some questions as well, all I'm going to say is that we have been quite fortunate with the Student Venture Fund. I personally have also been contacted by venture capital firms that have been interested in offering internships. We are becoming more and more well-known and well-recognized, and as the fund grows in age, more of our alumni are spreading the good word. So there's definitely a positive feedback loop that happens there between your co-ops and the venture fund or investment fund. I'm sure it's the same for you guys as well.
Yeah, I think it's a bit different on SIF just because for us, our co-ops are kind of separate from internships, whereas our internships are considered like summer internships and our co-ops are considered like off-cycle internships. So in that sense, our co-ops definitely led to our internships. You know, when you're applying for summer, it's a really competitive process. You're going up against Queens and Western, whereas for your co-ops, it's really just Waterloo and maybe Laurier. So when I was applying for my summer internship, definitely a lot of the co-op placements that I had within private equity and sales and trading was pretty important when it came to the interview process or even just getting an interview. Nicole, I don't know if you have anything else you want to add to that.
Well, I think you covered it all.
In that case, I just want to hop in real quick to clarify something for the benefit of the DECA students, which is different programs at Waterloo have different co-op sequences. So in the case of myself and Julia, after first year, we alternate between a school semester and a work semester. To us, co-op and internship are the exact same thing. I believe if you're in AFM, you have 4 instead of 6 co-ops, or perhaps 5 instead of 6. And depending on if you're working in the summer or if you're working in a different calendar section, your experience might be different.
Okay, we have a couple more questions. 5 more minutes here, guys. So, does the student investment fund only invest in blue chip stocks?
I believe so. I think we don't necessarily categorize them as blue chip, but we say that it's a 300 million market cap and it has to be headquartered in North America. Am I right, Aliana?
Yeah, I think you've basically got it. We're focused on Canadian and US companies. And then also, I guess, to answer the question of do you invest in international stocks overseas? No, we don't, but we've done case studies on some international companies just for learning purposes.
Yeah, so no penny stocks.
Okay, so what made you guys choose the University of Waterloo?
I typed my answer, but
Okay. If you want to let the group know.
let everyone know. Yeah. So I chose it because of computer science and finance. CFM, you're able to, people ask me, is one a minor? Are you just doing one on the side? But truly, I am majoring in finance and I'm majoring in computer science at the same time. We do the same undergraduate degree as the computer science kids. And then we don't do the same as the accounting kids, but we do the finance side.
On my side of things, I'll say that it was a balance. So I applied for UWaterloo for computer science, CFM, and farm because I wasn't sure which career path I wanted to take. And I ended up going for CFM.
That's exactly what I did too.
Because I wanted to keep the opportunities open if I wanted to go one way or the other. The reason I chose UWaterloo is because I'm quite passionate about entrepreneurship and I wanted to be at a university that fostered that attitude. You know, I had looked even in the States at some of the Ivy Leagues, and I feel like Waterloo does a much better job of kind of supporting that. The co-ops are an absolute massive factor in choosing Waterloo over any other program or any other university, simply because you get 2 years of experience and, you know, networking, even like getting paid, that just simply doesn't compare. And for example, in my case, I even did an e-co-op, an enterprise co-op. So I worked on my own startup for a semester. So there's lots of really awesome Waterloo specific things that you can get here. Yeah, so.
Yeah, I did kind of the same thing as Victor. I knew I wanted to go to Waterloo since I was like 7 years old. It was just a matter of what I was going to do at Waterloo. And I really liked the co-op program. I really liked the opportunity to choose between accounting or finance. Knew I wanted to do business, didn't know really what I wanted to do. And I really liked the both of the aspects that the AFM program gave me.
And just kind of adding on to why Waterloo, in high school, I was actually having a hard time deciding whether to go to Ivy or go to Waterloo. And I went to Waterloo and I 100% do not regret that decision. And I think at the end, what kind of made me want to choose Waterloo was, you know, you're getting paid on these co-op terms, right? And you can use these money to pay your tuition or to have pocket change. It's really great to have. And it's also, you know, it's like a stamp on your resume, right? So the next time you do get another internship, you can leverage your previous co-ops. And I would say, you know, I worked at KPMG when I was 19 years old. So making that money at 19 years old is definitely something really beneficial.
Thanks, everyone. So we are close to 8 o'clock, so we have to wrap this up. But thank you, everyone, for sending in your questions. So we apologize that we can't answer all of them. But thank you for being engaged with the content and thank you for attending. And also thank you to Nicole, Julia, Aliana, and Victor for presenting. That was an excellent presentation. Just a reminder to everyone that the Insta-Story Challenge and the feedback forms, if you want to be considered for the ICDC, that's happening in April. You have to complete those. So the Insta-Story Challenge to be completed by Saturday, and then the feedback forms to be completed by Friday. And you can get those links through the webpage that you'll be directed to once you leave this event. Yeah, so our next workshop is going to be tomorrow at 9 a.m. It's going to be called Cracking the Case. So we hope to see you there. You can join in through the link that's given to you on the DECA email. All right. Thank you, everyone. Have
Thanks,
a
guys.
great
Thank you,
evening.
everyone.
Thank you, everyone.
Thanks. Thank you.
Thank you.
Thank you.
Kaden and Farah, is there a way for the DECA students to reach out to current UW students and ask them for kind of like their experiences?
You're saying you want, do you want us to give them your email?
I'd be okay to answer.
I'd be
I
okay
think
with that, yeah.
most people wouldn't dare reach out, so whoever does,
Oh.
I'm happy to speak to.
That's awesome. Okay, so if you want to just put your emails in the chat here quickly,
Sure.
tomorrow at 9 a.m. it's all the same students. Okay, so we will put your emails in the chat for them and to message you guys if they have any questions about anything related to presentation or just university in general.
Yeah, absolutely, yeah.
Awesome.
Yeah, so hopefully you grab that.
Julia, I got yours.
Make sure I spelled my own name right. Yeah. Sometimes it happens.
The autocorrect, it gets you.
Yeah. Okay. Well, thank you, Farah and Keaton, for your hard work on this.
Thank you.
Thanks, Juliet.
Yeah.
Thanks for having us, guys. It's been a
Yeah.
actually Take care, everybody.
I actually have a quick question. So
Oh.
for those in university, like I keep hearing that you guys are like doing like multiple majors. Like how much like is the workload kind of thing for each one?
Yeah, so again, we're not in two majors. That's kind of the beauty of it is it's simply we don't have as much freedom to choose our courses in the first 2 years. They're all chosen for us, which I love finance, I love computer science. That's okay with me. The workload is different. I've heard people, and it's been my experience too, that it's common to have to separate the times you can work on your finance courses versus your computer science courses because it's just two different ways of thinking. If you're in things like double degree or software engineering, you do have to overload your classes. And so that's something to consider is if you want to graduate in, for a double degree, it's 6 years. Some people take 7. I personally am actually in my 5A, so I'm taking 5 years to graduate.
Oh, okay.
I'd say don't worry about it because if you get into university, and I'm sure you will, if you're in DECA, you're obviously hardworking, you put in the time, you came to these events. As long as you make sure that the work ethic is there, the course, like university is not trying to weed people out necessarily. It's not an unreasonable workload. And it's a quite different experience than going through high school because you're in charge of your schedule, which can be both good and bad. It means that you can work on things whenever you want to, but also means that there's nobody there to push you if you're not doing your work. So there's a lot more independence that comes into play. And, the work is still difficult. You are still learning. But at the end of the day, I'm sure that you'll be able to make it through it. So don't stress about that. Just be serious, be prepared to work, and you'll be okay.
Oh, okay. Thank you.
Of course.
You're welcome.
Were there any last minute questions? Someone else? Okay.
Don't think so. You guys
You
are
said, wait, well, actually, you talked about software engineering and overloading courses.
Sure, yeah.
What do you mean by that?
Okay, so
Like that's the program I'm kind of,
okay,
interested
yeah.
in
So
mostly,
what overloading is you're taking more than 5 courses. Waterloo considers 5 courses per term to be a full course load. Overloading is taking more than 5. I believe the reason software engineering overloads is honestly because of their labs. Software engineering, you have to do like some of the intro chemical, mechanical engineering stuff. So you do have to go to labs, which count as a course. For a double degree, that happens later. The reason I took longer to graduate was I wanted to take more challenging CS courses. So I would drop a course, meaning I'd have to take another school term to just finish it up. Like right now, I'm only taking 2 courses just to finish my statistics minor. It's just how I wanted to graduate. I entered school with Victor. I'm graduating at the same time, but he's had 1 more co-op than I have.
Okay.
I just had to do an extra school term. Yeah.
Okay, thank you.
You can absolutely join the funds if you want to do more accounting focused things. Victor, I don't know if you had anything to add.
Nope, I think you touched on everything. I guess for the benefit of anybody considering different degrees, it's worth mentioning that, you know, the way engineering operates, the way math operates, the way arts, so SAF operates, is quite different. With regards to math in particular, you know, I've heard that in engineering, they spend, you know, maybe 8 hours in class doing work and maybe another 4 at home, sort of like doing homework. Whereas for us, it's sort of the opposite. We'll spend maybe 4 hours in class in a given day and 8 hours sort of going through assignments on our own. So that's a little different. But
yeah, the engineers do their homework in class. They'll say they have 8 hours a day of scheduled work. They're doing their work in class.
At the end of the day, I think that the various programs are all worth considering. And personally, I would say that if you're interested and you're kind of on the fence about things, see if you can find some kind of joint program like CFM, or do a double major if you're a little brave and maybe willing to take extra courses. Personally, I've also been taking 6 courses every semester since joining SVF, because SVF counts as a course. And your 6th one is free, by the way. You don't have to pay extra if you're already taking 5. So good value right there. Yeah.
Awesome.
Okay, I'm going to ask, just because our hosts weren't planning on staying later, you can email us your questions. I'll drop it one more time in the chat. I'd be way more than happy to answer them. I do mentor first-year students every single year, so I'm used to answering all these questions.
I don't mentor first years, but I'll try to be nice.
Victor's very nice.
We'll send all the students your emails, so
yeah,
maybe look out for a couple.
Awesome, thank you.
All right. Thank you, everybody. Bye now.
Take care, everybody.
thank you.
Have a great weekend.
Great work.
Thank you.